In the last video, we looked at the key points for a good zone. We've worked out 4 points that you can see here again. Firstly, we want to see a sweep of liquidity. We want to see full liquidity in front of our zone. We want a strong zone and we need a fresh zone. We want to go deeper today and take a closer look at the strength of a zone. If you think about the example again. Here are all the 4 points in one picture. We've already talked about the fact that the strength of a zone is defined by a break of structure. But that's not all you can say about the strength of a zone. We should also take a deeper look here and see how else you can judge the strength of a zone. And for this, I have another chart for you here where we want to discuss the strength of the candles and thus get an even better picture of the zone. In the first example, we have demand and supply, and I have plotted 3 different types of movements away from a zone for you. In the first move, we see that the move takes place with a gap, which is often the case, especially in indices, where days are trending really strong. There can be a gap and the market really runs in one direction. This is very often a sign that this zone was really strong. In this example, the demand zone was strong. Of course, the same can apply for the supply zone. When such a gap forms, in combination with momentum candles, this is usually a sign that we have a strong zone ahead of us, because the market has no interest in running back down again, so there are areas we didn't retest after the momentum candles. These are the areas that we will look at later again. In the second example, we have momentum candles. We mainly want to use zones in which institutions become active. We've also already learned that there are aggressive and passive buyers and sellers, and that the aggressive buyers in particular ensure that the market moves impulsively. This means here are the players who really have the power and the capital to keep buying into the market until it moves to where they want it to go. Accordingly, such strong impulse candles are very exciting for us because they show us that there is real power here in the market. There is a small exception here with strong news candles. We have to be a little careful, but we will go into this explicitly later again. Important for you. If you see strong impulse candles, this usually indicates that we have aggressive buyers or sellers, and therefore this validates our supply or demand zone. Thirdly, I have given you an example of what you should avoid. If you only see a very slow movement out of a zone, I like to talk about a choppy movement that goes like zigzag. We see a demand zone with a bullish candle, then a bearish candle again, bullish, bearish, and very slow movements. The market doesn't really get out of the zone until it pushes upwards for so long. These are movements that show us no real power. They show no aggressiveness and are therefore very susceptible to a counter movement. Liquidity is collected here, which is then swept away at some point, and only then does the market move on. Therefore, stay away from such choppy movements. Of course, this also happens on the supply side. But as you can see, you can also tell a lot about a zone from the price action or the individual candles. And if you then combine this with the fact that the structural break occurs, you usually get a much better picture of the market than if you only look at one of the things in isolation. We also want to look at a few live examples so that you know what to look out for. We start with a gap. A good example would be something like this. Here we see a gap. If you see that we also have a gap in the momentum evaluation, we moved from this low with a big momentum candle up here, consolidated in this area here, and then we moved on. In this continuation, we made a gap. This gap shows us that this zone and this zone were both really strong for the buying power. And thus we know that here are very aggressive buyers in the market. Of course, right now, we don't know where the big players want the market to go. But we can assume that they want to go somewhere where liquidity lies. On this chart, where does liquidity lie? Above the all-time high. And that's where this impulse leads us without major retracements. This is a strong example of a gap in the market. The same goes for momentum candles in example 2. Here we had a high, we push to a low, and we have higher lows but a lower high. But here we can see we break this level, we have a break of structure here. We also have a break of structure here, so we're bullish again in the market. Here you can see momentum candles on H4. These momentum candles show us clearly bullish intent after this break. And after this momentum candles, you don't really see big retracements. Sure, you have some bearish candles, but they do not lead to any new major lows. You just keep moving on. You have a little retracement, more momentum candles, and more and more. And we just keep running and running. In example 2, we basically have a bullish push and very small consolidations after. This is a characterization of momentum candles. All this means, when you are looking at the zone, you should always pay attention to other criteria, such as candles and the price action, to evaluate the zone. In the next video, we will look at the freshness of a zone. See you later.